Okay. So learning objective 5 in this chapter finishes chapter 9 with some analysis. And so here you have examples first of how property, plant, and equipment and intangible assets are reported on a balance sheet. So here for Coca-Cola, their partial balance sheet just showing property, plant, and equipment, and their intangible assets are listed here. Okay. So that's important to know. One of the things, there's two pieces of analysis we're going to be looking at. The first is something called a return on assets. Okay. And a return on assets is how much profit are you generating from your total assets? Okay. Because the reason you have assets, well, there's actually a couple reasons you have assets, but the most important reason you have assets is to help you sell your stuff because you want to make a profit. So the return on asset ratio helps us measure, are we getting profits from our average assets? Okay. So this is the formula. And let's take a look at JetBlue in 2014. JetBlue had a $515 million profit in 2014. Average assets, so beginning total assets plus ending total assets divided by 2. So there's somewhere around $7.5 billion of assets. So that meant that they had a 6.8% return on assets, which is really incredible, because what this is really saying is that for every dollar in total average total assets, they're pulling in almost a 7-cent profit, which is really high for this type of a business. Okay, certainly it's much better than they were positioned in the previous year here. Well, how does that compare to Southwest? Well, when Southwest looked at its net income and compared to its total assets, average total assets, they had a return on assets of 5.7%, which in this case is also an extremely good ratio. That means they returned well over 5 cents of profit on every dollar of total assets that they have, which is really terrific for a company. The industry is the airline industry. When you looked at all of the companies in the industry, they only had a return on assets of 4%. So they were pulling in roughly about 4 cents of profits compared with every dollar in total assets. So you see both Southwest and JetBlue were doing better than the industry. They had a higher return on assets, which could tell us that they're using their assets wisely, because they're certainly generating profit from the deployment of their assets. Another thing they can look at is asset turnover. And asset turnover basically is looking at, are they using their assets to generate sales? So we're looking at the sales of the company compared to their average total assets. Okay, that's what the asset turnover is. Are they making sales from their assets? Again, that's the purpose of having most of your assets, particularly when it comes to the property, plant, and equipment and intangible asset portion of the balance sheet. Those are meant to help you sell stuff. Those are meant to help you generate profits, unlike your current assets, which are meant to help you pay your bills. So this is very important, and that's why it's in chapter 9 here. For JetBlue, looks like they had 5.8 billion in sales in 2014, compared to around 7.5 billion in total assets, average total assets. So that meant their asset turnover was 0.77 times. One way you can look at this as well is, and you can interpret it, is that for every dollar in total assets, they're generating about 77 cents in sales. Okay. for every dollar in total assets. Is that good? Well, we'll see. It's clearly better than it was the previous year because it was lower. But look at Southwest. Okay, Southwest Airlines ended up with an asset turnover of 0.94 times per year. Times, which means in essence, they are generating about 94 cents in total in sales compared to every dollar in average total assets, which is exceptionally high. They are really using their assets to generate a lot of sales. So in that sense, Southwest is doing a better job than JetBlue. But JetBlue is not bad. The industry itself has about a 0.8 times asset turnover ratio, which means roughly the industry on a whole is generating about 80 cents of sales for every dollar of total assets that they have, which means that JetBlue is in the ballpark, but Southwest is doing an extraordinary job at using its assets to generate sales. Okay, we don't need to watch the profit margin, but we will be looking at the Doit exercises in this chapter. Here we have Paramore Company. They had net income of 180 grand, net sales of 420. And then they had total assets of 460 on January the 1st and total assets of 540 on December 31st. So this is going to be your average right here. So what was the asset turnover here? All right, so the asset turnover is the net sales. So we need the net sales amount, which was 420, divided by the average total assets. So your average, you have to take the 460 and the 540 together and divide them by 2. And so here their asset turnover was 0.84, okay, which again, depending on the industry, could be very, very good. Very, very good. And that is basically it for the rest of this chapter that we're going to focus on. I think it's relatively straightforward. It's very interesting information to know.